Hey guys, it's Linton here. So the big Friday is here. It's Consumer Price Index Day, which is how we measure interest rates. So I'm going to go into a little bit of detail and explaining to you how that works. So see you shortly. All right, so the first thing we're going to look at is we're going to have a look at the economic calendar. So today we can see that we've got two readings coming out that are quite important. We need to see these two readings here. We've got core CPI month on month, and then we've got core CPI year on year as well. Those two figures are very important because they tell us what the inflation in the US is doing. Is inflation still on the increase, or has it peaked and is it coming down? And if we see inflation on the way down after a peak, that would be good for the stock market. We did see a big sell-off yesterday, which can be expected. Those of you that have been following me for some time will know that I said I wouldn't be surprised if we see the stock market trading on key support or key resistance levels just before the CPI release. And as it were, we're on a very key support level at the moment. Okay, so let's dive into CPI and what we're actually looking at. So we've got the monthly, month-on-month figure over here. Now, what that means is that is the change of the price of goods. Now, remember, this is core CPI, not headline CPI, so this excludes food and fuel. And the reason for that is those two things tend to go up and down quite a lot in terms of obviously has quite an impact on how the Fed and so on would read inflation figures, and that's why they exclude food and fuel, which is a good thing because excluding fuel means that the current strain on the fuel price isn't calculated into this core CPI figure. But let's break it down a little bit more. So this means that we are expecting a result this reading at 2:30 today, South African time, of 0.5% increase. Now that means that everything has got 0.5% more expensive over the last month. That's what we expect to see. If you multiply that by 12, 0.5% by 12, you get 6%, which is pretty much where the inflation is currently at. If we look at the annual, so your month-on-month CPI multiplied by 12 will give you your annual CPI, right? Depending on whether it's a higher figure or a lower figure. So if we want to go back down to the 2% inflation target that the Fed has, it means that this 0.5% increase is too high. And they need to curb this. They need to peak that inflation. They need to stop the increase in the price of goods at this rate. That's too much. So we need to get it back down in order to get our inflation target back down to the 2% level. So if we move on to the month-on-month core consumer price index figures, we can see how the month-on-month varies quite a lot. Here were a couple months where the increase was only 0.1%. The actual increase was only 0.1%. A couple months at 0.2, but these months here at 0.9, 0.9, 0.6, that's a big increase in inflation, and that's what we saw last month. There was only a 0.4% increase forecast for last month, but the end result was a 0.6% actual increase. So the dollar obviously gains a lot of strength from that, and the reason for that is because the higher inflation, the more attractive bonds are, which means that people are moving into cash, into the dollar, and so the dollar will increase in value. So while inflation increases, the dollar increases in value, and those two things combined see people pulling out of the stock market and moving into bonds and moving into cash. I've had a couple guys asking me how inflation affects the stock markets, and if you break it down, that's quite as simple as it is. Inflation increases. With inflation going up, we see the stock market going down simply because everybody's moving out of the stock market into cash, and that is just why the Fed is focused on keeping the inflation figures lower than what they're currently at. Janet Yellen made a big mistake last year saying that she doesn't see any inflationary pressures ahead. Well, she got that one wrong. There's a lot of inflationary pressure at the moment, and she even came out and apologized for that statement, saying that she did get it wrong. Let's have a look at the year-on-year figure for CPI. It looks like if we just, bird's eye view, have a look at what's going on here on the charts. Is it possible that we peaked? Yes, it's possible. Is it granted? Definitely not. So what we need to see today, if we want to see a really good result for the stock market, is we want to see this decline continuing on the year on year. We would also like to see a lower than expected figure on this month on month forecast. So if we see a lower than expected figure there, and we also see this continuation, this decrease, that would be good for the stock market. And I believe that yesterday's sell-off then was just in preparation of a good CPI result. Whether or not that's the case remains to be seen, guys. It's very important that you take note of that. It's not a given that today's CPI is going to be good for the stock market. We've got to wait for the figures to be released. I'm definitely not looking at entering any new positions yet. I am in buys, and I'm going to wait for this result to come out today before I decide which way I believe the stock market is going. So we're waiting to see this result. We're going to see, are we going to get 5.9% or less year on year? If we do get a lower than expected result there, and we get a lower than expected result here, I believe that'll be good for the stock market. So let's quickly jump into the Nasdaq and what we're looking at here. So big view is the weekly chart. We're having a look at the full correction that has taken place. We saw this three-wave correction. I gave this target very early on in the year. I think it was March. And this is an overall 30% correction. It's also a 50% retracement from the all-time high. If we look at the COVID low as the retracement starts. So what I like about this is a very, very key level. It's a very important level for us. And if that holds, I'm quite happy with my buys. I got in at this level over here, and I'm going to hold them. Yesterday's sell-off has got a lot of guys panicking and wondering where's the Nasdaq going. You shouldn't be in such a big position that this kind of move would knock you out of the markets. And if you are, your lot size is too big and your risk is too high. So what you need to do is you need to be in a position where you are starting to look at this as a possible entry point if you aren't in this long yet. And the reason for that is I'm going to show you this on a lower time frame quickly. So let's drop down to the 4-hour time frame. Now remember, I'm looking at the actual Nasdaq here, not at the futures, and that's why we can see gaps, etc. in the market. The beginning of the week, I mentioned that you guys need to watch this gap for a possible close before we see new direction, and that's exactly what has happened. So this gap over here was closed with trading yesterday. So what does that mean? Well, it just means that any orders in that gap need to be filled. So there were orders sitting there and the market needs to come and fill those orders. And that's why we saw this pullback. The important thing to note is that we did close outside of this flag. Does it mean that it is definitely going down further? No. We're on a very key support level here at the moment. And that is a level that I've been watching for some time. The next level down would be this one here. Let me actually give you an accurate level there, just so that we are fully aware of what the levels are. I'm going to put a line on there. We're looking at 12,050. So the reason I'm saying that is because we had this resistance test, broke the resistance, and it hasn't been tested for support yet, right? So we broke this level and it hasn't been tested for support yet. We could see a test before we get the reversal back to the upside, guys. It doesn't mean that it's definitely going to reverse there, and it doesn't even mean that the price is going to go down that far. We are sitting on this key support level before the CPI release today. If it is a good result, if we have curbed inflation and it comes down, I believe that this could very well be a good turning point in the market. And we could see this kind of formation take place, which is what I mentioned ages ago. If we're going to get higher highs and higher lows, that would mean that we have seen the bottom for now and that this is a trend reversal back to the upside. So the gap has been filled. That's good. It's important to understand that whenever there's gaps in the market, they act like magnets. There are other gaps further up as well. Here's a gap, for example. I'm going to put it in there. This is one that I've been watching for some time as well. So this gap also needs to be filled. And that ties in with a bullish picture. So overall look or overall view on the Nasdaq at this point in time is I'm still happy with my buys from this level. I'm looking at this as still a bullish formation with upside targets and hopefully closing this gap. And that's nearly at 15,000 already. So that's a really long way up, guys. We could see the formation of higher highs and higher lows to get us to that level. We might even see a good Elliott wave set up. For those of you who trade waves, I'm more of a Wolf wave trader than Elliott wave, but this could bode as a 1, 2, 3, 4, 5 up to close that gap. Maybe even find resistance at this high from that previous retracement. Let me clear these drawings and take you a bit further back so that we can see what I'm talking about. So this high over here would be a very big level of resistance that we need to watch should the price get back up there. So this kind of level here. Should we get a formation that takes us up above that, I would be very, very happy to say that this is a trend reversal and we are now looking to break those previous highs. Hope that helps you with your preparation for today for the CPI release and what to be expected. If we do get worse than expected results, it's going to be very bad for the stock market and we could see it pull off and break these lows. If these lows break, I'll be closing my longs and waiting for the next support level down on the fib, the 61.8, which is 10,500 on the NAS. As things stand, I'm still happy with my position, this being a corrective structure with further upside. Have a great trading day. Cheers.